0.7% is the quarterly growth figure that we've just had through from the Office for National Statistics, slightly higher than expected. And it's a really punchy number. I mean, everyone knew that this was going to be quite strong because we knew that there was strong economic growth in February. But people thought it was going to be about 0.6%, 0.7% better than expectations, considerably better than many of the previous quarters. I mean, just to give you an example, the prior quarter was 0.1%. And just looking at the annual rate, it's 1.3%. People thought it was going to be 1.2%. Now, gross domestic product, which is what we're talking about here, it is about the best measure, the most comprehensive measure that we have. I mean, there are flaws to it, like every statistic, but it's about the best measure that we have of giving you a sense of just how much output we're generating in the economy, just how much income we're generating, and how much better off the country is getting as a whole. And so the fact that it is growing faster than expected, clearly that is good news. The thing to bear in mind, though, is how much of this, and we'll be digging into the numbers over the course of the day and also talking to the Chancellor about this as well, how much of this is a bounce that we've seen in advance of the tariffs being imposed by the United States. Obviously, everyone knew that those tariffs were going to be coming in. A lot of manufacturers we've spoken to have been racing to try and get orders out across to the US before the imposition of those tariffs. So how much of this is that bump that we've seen in activity at many manufacturers around the country as they try and act and try and get there in advance? Just looking at some of the data here, the monthly figure was expected. And again, when we're talking about economists' expectations, it is really hard at the moment to judge what's going on here, given just how much volatility there is. But economists had expected that monthly GDP to be around kind of flatlining in the month of March. So what I was talking about at the start was the first quarter numbers, 0.7%. But for the month of March specifically, there's actually growth of 0.2%. So that's, again, better than expected. So take all of this together, and I imagine the Chancellor will be pleased to see it. The concern, I think, that we're going to probably hear about is how much of this is just a big bounce ahead of the imposition of the tariffs as all those exports are leaving the country, and then do you then have a kind of retrenchment down towards a lower figure in the future quarters? No one really knows at the moment, but for the time being, I imagine she'll be quite pleased to see these numbers.
I imagine she will as well, Ed. And I think what's interesting is that even if there is a sort of slightly fake additional aspect to this number because of a rush to buy things before, either import things before tariffs came into effect or export things before tariffs came into effect, we have seen at least half pseudo-rationalisation of that trade war aspect that was unfolding. So it doesn't have to be a purely arbitrary pull forward of growth. It might just be a sort of free bounce, and then we go back to how things were.
It might well be, and I think the question and the interesting thing to look at over the course of the next few months is obviously we have this trade deal. Well, not quite a deal. I mean, most people wouldn't call it a trade deal, but it's an agreement between the US and the UK, the first of what Donald Trump hopes will be many agreements, but nonetheless significant that it's the first. And as a result of that, the UK will have better terms of trade, at least until other countries have their versions signed. We'll have better terms of trade with the US than many other countries around the world, which, all else equal, even accounting for the fact that we are living in a higher tariff world, okay, even this agreement still means the UK will face higher tariffs on pretty much all goods sent to the US than it was only 6-8 months ago. Even taking account of all of that, that might help the UK versus other countries around the world. But I think we all are, as I say, we're living in a different world right now. People are just trying to work out, what does all of this mean for the economy? How much of an impact is it going to be? Is it just a shock that then goes away? Looking at share prices, they're up quite strongly in the last few days, just as a result of the deal that the US has struck, or at least the reprieve the US has given China over tariffs, and indeed that UK deal. But no one knows quite for sure what the next move from the US is going to be, and no one knows what the implications for the economy are going to be. And I think there's a lot of tentativeness here in the UK from the Treasury as well. And as I say, the Chancellor, we're going to hear from her next hour or so. A lot of nervousness about precisely what the implications are. But for the time being, these are the numbers: 0.7% growth in the first quarter of this year, better than expected, better than the previous quarter. Really, quite punchy growth rate. Annual growth of 1.3%. That is pretty punchy compared with previous quarters as well. And monthly growth in March of 0.2%, which again is better than economists had expected. So for all the provisos, let's just focus on that. Those numbers are definitely better than expected.
Definitely better than expected, Ed. My last question on this, say as you said, 1.3% on a sort of 12-month basis, given the challenges out there, isn't bad at all. And we often say how growth is the sort of antidote to all of the problems that a chancellor faces ahead of them, not just the superficial ones in terms of headroom, but actual ones going forward. Is that enough to solve all her problems, or does there have to be another big leg up? Because, I'm fascinated. You mentioned there that stock prices have bounced in the last couple of weeks, and they certainly have. So have bond yields. They've risen quite a lot. The UK 10 years at 4.7% this morning, the 30 years at just shy of 5.5%. Bond yields, borrowing costs in the UK are back to their, or just shy of that 20-year high that they hit a month or so ago. And that is a headache for her.
It is a headache, and it's this paradox, isn't it? That the stronger the economy is, and as a result of that, the higher people think interest rates are going to be, the higher those bond yields go, and that is something that haunts the Chancellor because it haunts the public finances. It pushes up your interest costs. But that is the situation. The UK has a very high level of its national debt. It is, we came to the edge of seeing what happens when markets get very concerned about that under Liz Truss in the face of the mini budget. And now, even though interest rates are starting to come down, even though we just heard from the Bank of England last week saying that those interest rates, essentially kind of confirming suspicions, those interest rates might come down further than expected, a lot is changing. And, all it takes is, for Donald Trump to say something unexpected, and those bond yields and the share prices and everything else can go haywire. And that's kind of what's been happening over the course of the last few months. So I think it is hard to make policy in those circumstances. It's hard as the UK to be able to contend with that, given that we are an open trading nation, and anything that happens, not just for our deal with the US, not just with our tariffs with the US, but around the world. If there's going to be a depression in terms of economic activity, in terms of the amount of trade, then that usually affects the UK quite a lot. And so it's a mug's game, basically, trying to forecast what's going to happen with these numbers in the coming months. Final thing worth just adding is that obviously we have the gross domestic product numbers here. It's going to be worth looking, and I'll kind of bring you this when we have these numbers, looking at just when you divide that per head of the population, what that actually means. It's going to be a positive number because that 0.7 is punchy. But the phenomenon we've seen recently is pretty strong, or kind of decent-ish economic growth, GDP numbers, but then divide that by the number of people in the country, and because immigration has been so high, actually GDP per head, which is probably a better measure of just your living standards, that has been shrinking many of the recent quarters. As I say, it'll be growing this quarter just based on how strong that is. But nonetheless, you've got to be a bit cautious about suggesting that this is necessarily brilliant news, given that we're starting to catch up from that deficit of growth per head of the population.